Hello everybody, welcome back to our channel and thanks for tuning in. Gold performance in 2021 was disappointing, we cannot deny it. To be honest, it was frustrating to hold gold throughout the year. And in fact, 2021 was the first year since 2015 that gold did not have positive returns. An ounce of gold was priced on January 1st, 2021 at $1,900 and on December 31st closed the year priced at $1,828. So there was no significant gain or loss in the 12-month period. In 2021, I ended up selling some ounces of gold because I found better investments during the year. In fact, that's one of the purposes of gold, is to store wealth until you decide where you want to deploy your cash. Anyway, the allocation of physical gold in my portfolio is still triple of what a healthy gold allocation should be. Now, looking to 2022, we should not believe or base our investments in forecasts and predictions. Remember, Bank of America was forecasting gold at $3,000 an ounce for 2021. Imagine, Bank of America has hundreds of market analysts and still they came with a forecast that is completely different than the real outcomes. After a few years investing in gold, I learned that gold is not a speculative instrument, a meme stock or a cryptocurrency. Gold does not supposed to skyrocket when everything else is going up. On the other hand, gold function is to maintain its value, especially when everything else is crashing. This chart compares the return of Berkshire Hathaway, which is managed by Warren Buffett himself, and gold. It measured the returns of both assets in this century, so since the year 2000. The returns of gold and Berkshire Hathaway are equal, but during the century there were two times when the stock market, real estate, and pretty much all assets crashed. The first event was the collapse of the Lehman Brothers Bank in 2028, and the second event was the breakout of the pandemic in 2020. These events caused the stock market and consequently Berkshire Hathaway to have the biggest downturns. On the other hand, these market crashes caused the highest returns in gold in the century, so gold proved to have an inverse correlation with stocks. With that in mind, nowadays, everyone is expecting a market crash or a market correction, and again, it was proved that these market crashes are good times to hold gold. That's why gold is called insurance. Now, insurance is something that you buy and hope that you will never need it. So, if your house, for example, is on fire, then it will be already too late to buy insurance. With gold is the same thing. If you wait for the market crash to buy gold, then it might be already too expensive, it might cost you a lot. So, will the market crash happen this year, next year? Honestly, nobody knows. But the market is cyclical and sooner or later it will correct. For that reason, in my opinion, it's prudent to have a small allocation of gold as insurance. That's what I did and that's what I do, because when the crash happens, it will be already too late to buy gold. The Federal Reserve Chairman said we might have 4 rate hikes in 2022 to increase the interest rate to 1% by the end of 2022. So 1% interest rates on an inflation that's already 9% will do nothing. It will not even tickle the inflation. The Fed doesn't have a clue what they are doing. They blame inflation on supply chain disruption. Then the problem was the price of the used cars. Recently, the US government says inflation has been caused by the price of beef. Can you imagine that? Since 2008, major central banks have printed and pumped the economy with over $25 trillion. Of course it will cause inflation. It's actually more likely to cause inflation than the price of used cars, energy or beef. The Federal Reserve actually just a few months ago, you might remember that, they said that inflation was good for the economy. They were trying to create inflation and they would let inflation run hot above 2% to compensate for the years without inflation. Not only the Fed said that, but also the Treasury Secretary Janet Yellen. Now, inflation caused by the Fed is the #1 problem in the world's economy, and the people in charge have no idea what they are doing. Also, the US government did not even started yet with the Build Back Better bill that will inject additional trillions of dollars in an already overheated economy and Federal Reserve balance sheet. Obviously, when you inject so much money in the economy, it causes inflation with some delay. Studies suggest 12 to 24 months delay. So in fact, all the currency printed during 2021 could still add more to the inflation numbers that we already have. Again, inflation is the #1 economic problem in the world, and for sure the Federal Reserve is talking about increasing the rates to fight inflation. Higher rates are not good for gold, and honestly, 4 rate hikes amounting a total of 1% as the market is expecting does not scare me. Imagine interest rates at 1% with inflation of 6%, then the real rates would be still 5% negative, and I don't see that as being a threat to gold prices. Now, let's imagine what could happen to the price of gold when the Federal Reserve uses its last tool to fight inflation, raising rates, but the inflation does not come down. Inflation is persistent. The Federal Reserve already tried to fight inflation. Inflation keeps running hot. That point might be your house on fire and could be already too late to buy the insurance. Gold still sleeping. When gold wakes up, it will shake the world. This will complete the video for today. Thanks for watching. Protect your wealth. Stay safe. Take care.